Welcome back to Investing Talk Podcast.
Today we're looking at intuitive machines.
As usual, before we start, subscribe, like, and comment to this video to support the show. And if there's a specific company you want us to look into, leave it in the comments below.
So let's get into the analysis. And, when we're talking about intuitive machines, we're talking about a company that has seen just a dramatic financial inflection.
A huge shift.
A huge shift. They've gone from being a pure research and development company to an operational one, and maybe most importantly, a profitable one.
Yeah.
This is really the core of the bull case right now.
That transition is massive, especially in a sector like aerospace. I mean, what we saw in Q4 2024, that was them delivering their first profitable quarter as a public company.
Right.
That one event just completely changes the story for investors who might be a bit risk averse.
It absolutely does. And the numbers, the financial figures from 2024 are almost, well, they're astronomical. Full year revenue hit $222.1 million.
And that's a 309% increase from 2023?
Exactly, a 309% jump.
Yeah.
And most of that was loaded into Q4, where they pulled in nearly $120 million.
Yeah, we know why, right? The successful IM-1 mission, the Odysseus lander. That meant they could finally recognize all that revenue, turn those milestones into actual cash. But is this sustainable? Or was Q4 just sort of a one-time accounting thing?
That is the perfect question to ask. The huge jump, yes, that reflects the successful mission.
Yeah.
But sustainability? You see that in the margins.
Okay.
Gross margin expanded in a big way. It hit 23.1% in Q4 2024. And you have to remember where they were.
They were negative before that.
They were negative in Q4 2023. So to go from negative to over 23% positive in just a year, that shows some incredible efficiency gains. They're leveraging their fixed costs.
So they're finally monetizing that core Moonbus architecture that they spent years developing. The R&D costs are sunk, and now it's turning into high American revenue.
Precisely. And that flows all the way down. Their operating margin actually turned positive at plus 1.4%. They're going from burning capital to generating it.
Which is so crucial.
It's everything for a company like this.
And speaking of capital, their balance sheet. It looks incredibly healthy. That gives them a runway to absorb the risks we know are there. I'm seeing they ended Q1 2025 with $238.6 million in cash.
And almost no debt. Only about $17.1 million. So they're in a massive net cash position.
Yeah.
For a company that still, operates with the risk of a potential mission failure, that cash cushion it's critical stability. It's basically an insurance policy.
It's also really notable that they're already generating free cash flow. Both Q4 24 and Q1 25 were positive. We're talking $19.2 million and $11.4 million.
And that's not cash from financing. That's cash from the business itself.
Which they can then put right back into the next project.
Exactly. Their next milestones and, just as important, developing their future commercial side. Specifically that lunar terrain vehicle, the LTV.
Okay, so the financial story is solid. They're profitable. They're cash rich. Margins are expanding. But the real moat in this industry has to be operational, right?
It has to be.
What gives them a long-term hedge beyond just being the first one there?
It's what some of us are calling operational irreducibility.
Okay, break that down for us.
It means they aren't just one of many lunar companies. As of right now, they're the only commercial company to have successfully delivered a payload to the moon, period.
That first mover status in a brand new market is priceless, especially with NASA as your main client.
And that success, it validates their engineering in a way that, no balance sheet or R&D report ever could.
So NASA trusts them.
NASA absolutely trusts them. And you can see it in the contracts. Intuitive Machines has secured 3 of the next 5 scheduled NASA CLPS missions. We're talking IM-3, IM-5, and IM-7.
And IM-3 is the big one, isn't it? The one going to the lunar South Pole.
That's the one. The first ever dedicated science payload to the South Pole, which is strategically vital for the whole Artemis program. NASA is putting its highest priority stuff in their hands.
So that institutional trust is one layer of the moat. What about the tech? Do they have real IP that someone else can't just copy?
They do. The company holds 28 granted patents in these really specialized mission-critical areas.
Like what?
Things like autonomous lunar landing systems and this is really cool, proprietary regolith sensing systems.
Regolith sensing. So that's for the lunar dust. Why is that so important?
Well, regolith, the lunar dust and soil, it's a nightmare. When you land, the rocket kicks up all this abrasive material. It can blind your sensors, damage your equipment. So what they've patented are systems that use radar and complex algorithms to sense the terrain in real time right through those dust clouds,
Yeah.
all the way to touchdown. It's their own system.
So they're not relying on third-party tech for that critical landing phase?
Exactly. And that IP moat makes it really hard for NASA or anyone else to switch providers once they're integrated.
Okay, that makes the bull case incredibly compelling. You have confirmed profits, a strong cash position, a huge first-mover advantage, and this protective IP. But this is still a space stock. Analysts are always clear about the risks, so where does the skepticism start?
The bear case, really, it begins and ends with two things: concentration risk and execution volatility.
So, NASA.
NASA. Their greatest strength is also their biggest liability.
Right.
Over 80% of their projected 2025 pipeline is reliant on NASA contracts.
And if you're 80% reliant on one client, you have to look at how stable that relationship is. What if Congress cuts funding for the CLPS program?
That is the core risk. Now, CLPS has bipartisan support right now, but, long-term government funding is never a guarantee.
Never.
And more immediately, what if NASA decides it needs a second supplier, just for competitive reasons? That would instantly slice their market share. The concentration it's acute.
And then there's the other side of it, the actual engineering risk. Space is hard. IM-1 was a success, but it wasn't perfect. It had some landing issues. What happens if there's a total mission failure, say with IM-3?
A single catastrophic failure would be devastating. Now, analysts think the probability of that is lower now because of the lessons from IM-1, but the consequences, they're exponential.
You're not just losing the revenue from that one mission.
No. You'd lose millions in revenue, sure, but you'd severely damage your credibility with NASA. That would impact every future contract negotiation. It could even delay the entire Artemis program.
And with the stock like this, it wouldn't just drop 10% on news like that. With its thin liquidity and high short interest, any bad news could trigger a really steep, sharp fall.
That's the volatility you buy into with this model. The whole valuation depends on flawless execution. If they falter, the market has zero tolerance.
And I remember reading that the company has had issues with transparency in the past. It's tough to build a good financial model when the reporting is erratic, isn't it?
That's a continuing problem. Without stable recurring revenue outside of these big NASA contracts, it's hard for anyone to gauge near-term momentum. Investors have to accept that the thesis relies on future events, not current cash flow.
So the key for investors is to watch those future events, the catalysts, very closely. What should we be looking out for over the next few months?
The first big one is the Q1 2025 earnings report, which should be around May 8th. The market already expects revenue to be down from the IM1 quarter.
Of course.
So investors will be looking at two things: gross margin, is that 23% number sustainable? And confirming that their cash runway extends well into 2026.
If they can show they're managing their cash well, that quiets some of the fears the bears have.
Absolutely. And then later in May, on the 21st, there's an Investors Day. Cool. This is all about pipeline visibility. We expect them to give the full timeline for the IM-3 mission and, crucially, demo the lunar terrain vehicle prototype.
So making the LTV real.
Exactly. Turning it from a speculative idea into a tangible near-term product.
And then the big operational test comes later in the summer.
That's right. The IM-2 launch is targeted for July. This one is carrying NASA's Trident instrument, which is key for resource mapping. A successful mission triggers more revenue. But more importantly, it proves IM-1 wasn't a fluke.
And it seems like the market is already pricing in a lot of this success. We're seeing technical signs that money is flowing back in. I hear analysts talking about the Golden Cross. What is that?
Yeah, the Golden Cross is a big technical indicator. It happened back in March, and it basically signals that the short-term upward trend has crossed above the long-term trend. It confirms that institutional money is building sustained momentum.
I also saw a mention of a cup and handle pattern breaking out.
Yeah, these are classic chart patterns. It's a sign of consolidation followed by a strong breakout, which we saw in April on high volume. The technical setup essentially suggests the market believes this turnaround is real.
And that's backed by smart money, it seems. There was significant institutional buying in Q1.
A lot of it. Big players like BlackRock and dimensional fund advisors really increase their stakes. When the big institutions start clustering their buys, it indicates they see a foundational shift.
Not just a temporary bump.
Exactly. They're buying into the long-term story.
And that's usually reinforced when the execs themselves are buying. Did we see any of that?
We did. Insider buying has been really notable. Executives bought about $3.2 million worth of shares earlier this year. When management puts their own money on the line, especially in a volatile sector, it's a huge vote of confidence.
All of this confidence is leading to some pretty bullish price targets. Needham, for instance, raised their target to $14.50.
They did, and their reasoning was they called them the first profitable lunar company.
Right.
But an investor has to be critical and ask, does that price target rely only on the confirmed contracts? Or is it already pricing in some of the more speculative stuff?
And that's where we get to the high-impact, low-probability rumors. What's the chatter?
The biggest rumor by far involves NASA's Human Landing System, or HLS, Phase 2 contract. This is for a crewed lunar lander for Artemis V.
A multi-billion-dollar contract.
Multi-billion.
Yeah.
And the unconfirmed chatter is that Intuitive Machines is in the final stages of negotiation.
Wow. If that happened, it would instantly change them from just a cargo service to a critical piece of human spaceflight.
Completely. It would put them in a new class of aerospace contractor. The other rumor is around strategic partnerships.
I heard whispers about advanced manufacturing.
Yeah, there's talk of a potential partnership with Relativity Space, using their 3D printed components to streamline production, and hints that a heavyweight like Lockheed Martin might be interested in co-developing the LTV hardware.
So if we zoom out, this is clearly a high-growth, high-risk play. It's all about operational performance. What's a realistic investment horizon here?
I think the consensus view is about 18 to 36 months. The real upside isn't unlocked until they successfully launch these next few missions, and critically, until the commercialization of that lunar terrain vehicle actually starts.
So you're betting on them becoming a foundational piece of this new lunar ecosystem.
That's the whole thesis.
Yeah.
It all relies on the company executing its defined, contract-backed pipeline. Can they convert NASA's trust into reliable, positive cash flow over the next 4 years? Operational success isn't just a goal here. It's paramount.
And that's the perfect thought to leave you with. This is a high-stakes, high-reward environment. If they continue to execute flawlessly on the moon, the revenue and the growth will follow here on Earth. Thank you for joining us for this analysis. If you enjoyed this deep dive, please remember to subscribe, like, and comment to support the show. We'll be back next time with another company under the microscope.